All right, welcome to the money flow. Always remember, whatever you think about comes about. Whatever it is you put your focus on, that's what grows. If you have the book, The Science of Getting Rich, there's a free link to it in my newsletter, the Peters Report. There's a link to it. There's a link to it all over the place. If you've opted into my 17 steps, that's what that's revolving around, is the book, The Science of Getting Rich. I'm going to try to give it to you in a different way, though. That's what that is, a big, giant book study. It's a great guide, though, to help you be an investor, a trader, just a person, an entrepreneur, whatever it is you're trying to accomplish in life. It's a great book. And so trading is a mind game as much as it is a tactical game, as much as it is a game of knowledge. The ownership of money and property comes as a result of doing things in a certain way. And those who do things in this certain way, whether on purpose or accidentally, get rich. While those who do not do things in this certain way, no matter how hard they work or how able they are, remain poor. Now, Robert Kiyosaki said basically the same thing in his book in a more modern way, right? A more modern way in the book, Rich Dad, Poor Dad. I'm not a big fan of Kiyosaki, but of Robert, but that is a badass book. The cash flow quadrant was better from a purely business point of view or investor point of view. And so this for me here is business. This is investing. I'm actually trying to make money to do this, right? I'm trying to make a lot of money, really, to be honest. And the money flow, which is a concept that obviously you probably know what it is. That's why you're here. It's why you're listening. The money flow is about watching the stock market from the perspective of a belief. And so, like you probably read a book, you saw a video, you came across something, somehow you got onto the stock market, maybe through work, your 401k plan. There's a lot of ways to come into the stock market. And the stock market's kind of a general term because it's bigger than the stock market. There's the Forex market, right? There's the bond market. There's the municipal bond market, right? There's the real estate market. There's the crypto market, which has become, there's billions and billions of dollars in that market. And that's a brand new market. And inside of all of these things are all interconnected by the revolution, evolution of, or simply put, the rotation of the world. Meaning every day we're dealt a new card and we don't know what's going to happen. And inside of that, that's the money flow. And the shorter the window of the money flow, like this is a daily chart, right? If we back it up to a weekly, where each one of these little bars you see is a Monday through a Friday. Monday through Friday, Monday through Friday, Monday through Friday. This big picture. In the Dow stocks, this is your big ass sell-off we've had. None. Not any. So the composite average of the 30 Dow stocks hasn't sold off at all. At all. Like barely. Like from here to here. All the sell-off we've seen recently has been in the Qs, right? Look at the weekly chart of the Qs. 3 weeks straight down. Now, on a big picture, it doesn't look that bad, right? But right there, it looks kind of bad. It always feels bad. But what I figured out is this game is kind of rigged. It's a rigged game. If I said to you, hey, in 2 years, where do you think the F-150 truck will be? Do you think it'll be cheaper or do you think it'll cost more? Everybody would go, well, it's probably going to cost more. You mean they don't make cars cheaper? No, they keep going up. Oh, but they do have sales, rebates, right? Yeah, but the general price of cars go up. Have you not noticed? Houses, they go up. You notice what else goes up? Antique art, land, video games, right? iPhones, like everything. Netflix, up. The price of Netflix goes up, what? Things go up. Everything goes up. But inside of that process of the money flow of things going up and down, not everything moves exactly the same, but they do tend to move in the same general direction, right? And so I call that the wind. And so if we look at the S&P 500, this is super important to your investing. This is the S&P 500. General direction, most of the time, the S&P 500, I mean, we can just back it up, dude. Let's go to a fucking monthly. Each bar is a month. And we have periods. We have times, seasons, things happen. Look, 6 months straight down. 6 months straight down. Months down, down, right in here. Look at that, down. Oh, COVID. Shit, remember how bad COVID was? In the fucking world. Look where we are now. In other words, as the price of everything in your life goes up, appreciation, just general appreciation pushes the stock market higher, inflation. And if you haven't noticed, the price of Bitcoin just goes up, right? Now, but inside of this, not all stocks do this. Take a stock like Amazon. You think, my God, how the fuck is this stock $3,000? Well, it's been playing this game for a long time. When Facebook came on board, 10 years ago? What did Facebook start the game at? It doesn't even go back that far. Way back here, right? At a nice low price. But what has Facebook done? It's gone through all these cycles that the market's gone through as well, right? And it's just appreciated as the U.S. stock market appreciated. Why? Because it's a real business, makes real money and it's inside of those indexes. So when you look at the QQQ, it looks a little different, but Facebook is operating inside of that, right? So inside of the money flow are these stocks that move around. And you're going to see, where's my picture? They move like this. And so as I began to observe that process of this idea, I'm like, damn, wait, I can put money into this, right? And I can follow different markets, different sectors, and I can allocate money. And when they sell off real big and then start to go sideways, if I know the game is rigged, and it is rigged, people talk about the stock market's rigged. Yeah, it's rigged. It goes up, but not all the time. About 70%. I usually say 71. I'm just fucking playing with words there. That's marketing. Basically like 3/4 of the time. 1/3 of the time it goes down. Here's the problem. We don't know in this pattern of price going up, over, and down. Now, I take it down to a perfect line, but we don't know how far it's going to go up or how long it's going to come down. Why? Because we didn't know about COVID. We don't know about wars. We don't know what Biden's going to do tomorrow. We don't know about tariffs. We don't know about viruses. We don't know that, this company's going to miss earnings. We don't know this technology is going to fall apart. We don't know that the Attorney General of California is going to bring Uber into a lawsuit. We don't know that. Like, nobody knows that shit. And so inside of that movement of news and reaction and movement, price moves, and you'll see it. It'll move in this pattern. It'll go sideways, it'll run up, it'll go sideways, it'll run up, come down, it'll go sideways, it'll run up, go sideways, run down, go sideways. Now we see it going sideways, and then it'll run up, right? It'll run up. Now some are going to do it beautiful. Look at this. Look at Groupon. And keep what I just said in mind there. They're going to go sideways. They're going to go drift up. Now, this is just big picture. So each one of these bars is one day. We haven't even got into how all the lines and all that bullshit can help you. If you don't understand the philosophy, none of this shit matters. It don't matter a price above a green line, below a green line, crossover an indicator. If you're too stupid to understand the big picture, if you can't internalize the fucking game you're playing, the history of the game and how it works, and that there are forces bigger than you at work here. There's forces bigger than anyone in the market. And we have millions of people every day wake up to play this game, to try to allocate money, to try to take money from you, or try to outsmart you, or try to do it better than you, so that they can make shit tons of money. And so there's people who wake up and get at a desk with $1 billion fucking dollars, and they're playing the same game you're playing on Robinhood. except they got more zeros. And so when they win a trade, they make lots of money. And so when they make 50,000, they might pull it out of the account and go pay some bills and buy some shit and then get up the next day to trade this game. And sometimes they're going to lose, sometimes they're going to win, right? But you have to have some way of creating order out of all of this. Otherwise, you just get knocked around based on what you see other people are doing. So what the charts allow us to do is to visually look at all the chaos of the prices going up and down, up and down, up and down, up and down. And then we can begin to look for patterns. And here's the thing. If you're Warren Buffett, and let's say you want to buy this stock, you can't just call up and go, hey, give me 10 billion of Groupon, please. Why? Because Groupon will do this. It'll go to the fucking moon. He can't get filled on that order. So what do? They start nibbling. And they're buying every day 10,000, 10,000, 10,000, 10,000, 10,000, 10,000, 10,000. And then other people say, why? Why the fuck is this well buying 10,000? And they start noticing. And the volume starts to pick up and the decline stops, right? And maybe some analysts are watching it. All of a sudden, some of the news this guy was anticipating starts coming true. And then what happens? You'll see price break out. Now everybody's hearing about it, right? Now a lot of people are starting to hear about it. People are researching it. And it just starts drifting higher. Price has changed, right? And somewhere along in here, someone's going to say, listen, I've made enough money. But they're not going to say sell 10 billion of, no, they can't. It'll drop the market. So they just start selling. And price just doesn't go any higher. And you get what's called resistance, right? Meaning whenever it hits that price, it gets sold. They're selling it enough. It can't go any higher. Often what you're going to see is this is going to happen on charts at about the actual price of the stock. Like if you look over, you're going to look and go, wow, this thing is worth 40 bucks. Look, it stopped at 40 bucks. Meaning there's no one in the market that thinks it's worth more than 40 bucks. So what happens when something hits true value? Like this is what it's worth. It stops going up. Matter of fact, it starts to drift. And then there's people who go, well, shit, I don't want to lose all my gains. And they start to sell it and the pressure goes the other way. And then at a certain point, watch this. It'll come down and there's a guy who's looking at this who's like, man, I wish I'd have bought it over there or bought more of it over there. So maybe he thinks this is a deal. So he's getting in. And this game plays out over and over and over around this pattern. And here's the thing. It's playing out in different sectors because different influences. You remember when oil, let's look at Exxon. So if you're in all tech stocks right now, you're not in this, right? So this is my largest position in the stock market right now. Oil. Why? Because we bought it down here. So I'm looking to be a buyer when everyone else is looking to be a seller, right? And so I'm wanting to see a lot of red. So this indicator up here helps me determine that. It's not foolproof. It's not. But what it lets me know is kind of like a fear gauge. And that's a good way to look at it if you're new. If you don't understand, this is called the RSI. And so as I watch this pattern play out on a big picture that 71% of the time the markets are going up, and then they have periods of craziness where they go down, I have to use those periods of craziness, which don't last long. It's only 29 fucking percent of the time, which means I have to act fucking quick. I need to have my money together so that I'm not being a dumbass and buying stocks up here, okay? So this is why you hear me yell at people about don't buy stocks when they're on an extreme RSI. So if you're excited about, guess what? Oil's the story right now. Well, you should be selling into this strength of the oil to buy what? I don't know, maybe like Peloton, because it's sold off. It's on the opposite. You see what I'm saying? So we're trying to be on the opposite. You're trying to, why? Because you want to start accumulating, but guess what? We need evidence. I need evidence that this thing has stopped fucking dropping. This needs to stop dropping. So I don't want to buy it into the drop. I want it to stop, or at least give me the appearance that it stopped. I need some signals. And so I began to create signals out of this pattern of movement right here on charts as I would watch stocks in the fucking world revolve around, and the news, and whoever's the idiot president talking, and whatever the problem, maybe it's with Russia. When I was in my 20s, it was Russia, and then it was fucking Iran, and then it was, who else was? Then it was Iraq, right? Who else? And we just rotate, and it's always somebody pissing us off. Right now it's the Chinese, and then it'll be, who knows? Might be Panamanians next month, right? And inside of all of this, prices go up and down, and then guess what? New companies come on board. New companies jump into this, right? And Amazon came in at what, $40? And Amazon's been playing this game now for what, 25 years? And so now it's been every sell-off in Amazon was a chance to accumulate wealth. If you were targeting every bottom all this time, you'd be a rich, rich person. Everyone you know would be rich right now. As simple as that. All they had to do was buy Netflix on stage 4s. If you just did this your whole fucking life, you just bought more and more. Every time it dropped and went sideways, you just bought. Guess what happens over your life as this stock just goes higher and higher and higher and higher. So for 10 years, and I guarantee you, if I had told someone to do this here, he'd be like, man, that's crazy, man. Are you crazy? That's crazy, man. You got to be, no, you got to move in and out, bro. Like you got, you can't hold, like, see what I'm saying? So let's just pick. Go through your house. There's all kinds of stocks you use that do this. But listen, there's different forces and factors that hit different ones. Let me show you one. Edison. Shit, your grandpa could have bought this. This was invented by Thomas Edison. It's been an electrical company since 1850 or something. Look, this thing is traded since we've had, like, think about this. Look, you see like a pattern it plays in? And then it goes sideways, and then it runs up, and it goes sideways, and then it comes down, and then it goes sideways. And so if we're buyers on extremes, right? And what are we trying to do? Sell it on extreme highs. And you say, why would it go to an extreme high? This is the market. It's rigged. It swings way too low, and then it swings way too high. So look at oil. Look, yeah, now it's going way too high. Now oil's overpriced, right? Where was it? Came way down. Now it's going way up. Look, came way down. And then, well, of course, from here to here, not that far. But this is the USO, so it's all jacked up. This thing does reverse splits and all kinds of shit. Not a good example. Let's look at Exxon. God, look at this move. Look at these lost years. 2015 to 2020. That was the price of Exxon. Look at that. What is that? 5 years. Jesus. Boom. Interesting. So now it's on a tear, right? Now it's on a tear. Let's look at Pepsi for a second. Look at Pepsi. Tried to put in a bottom here, broke out, busted out. This is your problem if you trade the money flow. It's not a problem for me inside of a buy and hold. So as you try to create the pattern, you can see it, right? This was right here. So price stopped dropping. In other words, price went down, stopped dropping, started going sideways, right? Which is over here. It's going sideways. And then it broke out. And then what did it do? Broke right back down. Broke the box. So if you're short-term trading, there's your shot. I mean, right here, you can get out, downsize the trade, or just realize, hey, this is going lower. So if I'm really wanting to build a position in this, and let's say I really think this is undervalued, I would just wait. I'm just waiting. I'm waiting for it to stop dropping again. I'm waiting for it to stop, and then my MACD to turn up. So if you don't understand any of what these things are that I'm talking about, just hang with me. You'll get it. One of the hard parts is when we look at this and you're like, yeah, okay, Gerald, I can see the pattern, but why would you buy Pepsi here? A couple things. One, and you may or may not have been trading long enough to know this. This little gold line here is kind of like trader dust magic. Like this shit here, I want you to see something. This line has mojo on it. Look, you'll see it get hung up. It'll stop on this yellow line. There's something about this yellow line. That yellow line is the 200-day moving average, basically 1 year of trading. So when price goes below it, institutional traders, banks, hedge funds, private endowment funds, private offices, billionaire traders, right? Mutual funds. When that goes below that, that goes on their radar. This is a dividend stock that went below the 200-day. It's now basically officially a bear market is what they would call that. What they're looking for now they have a chance to pick up a quality asset on sale. So if we say, what do we think this is worth? An easy way to do this, or one resource you can use is Morningstar. Another is Tip Ranks. And all these guys are going to do is give you insight into people who analyze stocks. Doesn't mean they're right. They say it's worth 152 on average, the average analyst. And you come down here and you can look and see their research and you can go make your own opinions, right? But for me, I own this. Like I've owned this stock for 10 years. So I'm looking to buy on bottoms. Why? I want to get rich. I'm trying to build huge positions in stocks. So I want to build this over time, right? Until this is a $30,000, $50,000, $100,000, right? When it's 100 grand, it goes from here to here. It's a bunch of money. And so I'm looking to buy on these lows if I can do it. And so what I'm trying to do is bring all these indicators in. The big picture that price moves in 4 stages and it's completely fucking normal. Price selling off is completely normal. It's how prices move. Amazon went through this pattern hundreds of times to get to $3,000. It started over here at 50, and it's been doing this game the whole time. Inside of the big picture of markets moving, news, and with the big picture that over time, look at technology, pull it up on a monthly chart, that the game is rigged, that the government and the people and new people being born and new babies needed a place to invest, and there's less stocks in the world. There are less stocks and more money. When I was a kid, there were over 9,000 stocks you could trade. Today, it's like 5. There are half as many stocks today as when I was a kid, and there are a lot more people buying those stocks. That doesn't take a fucking genius. If you have less of something and more people want to buy it, what direction does it go? Up. So you get people that are freaked like, oh man, housing's going to crash. Is it? Why? There are more people and less houses. Why would it crash? Well, people want their money to do what? So you take your money out of the stock market right now. What are you going to buy? You're just going to eat cash? Just sit on a big pile of fucking cash and just eat it. What do you think is going to happen to that cash? You're going to buy real estate? It's overpriced. You're going to put it in gold? It's going straight down. Like, what are people going to do with the money? Buy bonds? Are you out of your mind? They're crashing. So money comes back into the market because there's nowhere else to make money other than taking that money out and going starting a business. Now, I guess you could do that. smaller players, but you can't do that if you're a hedge fund. I need to make money with money. Where am I going to put the money? I don't know. I'm always asking myself that. Okay, you're bearish. Now what? Where do you put the money? So about 2-3 weeks ago in my story, I kept saying that I was buying utilities with my new money. With my new money, I'm buying new utilities. Let's go to a weekly chart. I felt like utilities are cheap. In comparison, if you look at this chart in comparison to, say, just the general technology stocks, they were way up, right? Now technology's coming down, and we're finally, looks like possibly bottoming here on the utilities. I thought we had bottomed over here. Not so. So, the pattern's getting a little wishy-washy. It was setting up perfect. If you look back over here, hold on. Sideways, and then we had our up, and then we came in. So the wave, and then look, we didn't do it. We broke back down. Where'd it come? Right back into support. So back where we originally started buying them. Now, I took some off. Price got a little overheated up in here. That's a huge move for utilities, by the way. Doesn't look like it if you're used to looking at other charts. That's a big-ass move for utilities. So, but if you notice, I don't know. They caught a bid today. Looked to be forming a box. The stock that I've been buying, the stock has a better picture. AEP. And you can see the pattern looked a lot more obvious over here, right? You can see it. But then we didn't break out. Remember I talked about this magic line? Price either gets hung up on it or breaks. And then look, couldn't get above it. It's attracted to this line. So it'll go to $82. I actually call it this strategy of catching these stocks below the yellow line and waiting on the stage 1, stage 2 breakout. We call that the bread and butter. These are the easiest trades in the world, man. Trying to think of another one. Look at Intel. Look, every time it falls under this yellow line, you'll see it. It just runs up to it. Runs up. Didn't quite get there. Runs up to it. Look, falls back, bounces off of it. See it? Just something about this line. If everything's bullish, it'll bounce off of it. If everything's bearish, it'll hit it and come back down. And look, you'll see it sells off real big, and then what? This is how price moves. You'll see it. It'll go up. It'll go sideways. If it sells off, it'll go, and then it'll stop. And you'll have a bottom day. It'll always be on an extreme. And then this histogram will start to tick this way, and that'll tell you. Usually about right in there, I'm looking to be a buyer, right? Sideways, sideways, sideways. There's our breakout. So if we're looking at the pattern, all those indicators are doing is just trying to help me see this with a scope on it. Meaning I'm looking for prices to sell off, start to go sideways. And on some stocks, it'll just be obvious, like, wow. Others, you may have to look a little harder. But either way, these are all going to line up for you. I have tons of videos on how to read these 5, 10, 20 days, the alignment. It gets hard on a single video to take the big picture and break down all these indicators, what we're looking for. Always, as a general rule on indicators, the moving averages, it's really not so much about the crossover. People tend to make a big deal about the crossover. That's really not what's a big deal. What's a big deal is when price is printing. When I say printing, I mean, when you look at the bar, like right now, price came up to what? 60.74. If we look over, the 20-day is 60.78. So it's slightly under it. But you see it was trying to come back. Pretty bullish, right? So as long as price is on this side of the green line, then it's just generally bullish. If it's on this side of the green line, it generally just comes down. And what you'll see is it'll move inside of this pattern. And so as we watch this pattern play out, we know on the stage 4 down, Price is on this side of the green line, so it's turning down. The 5-day and 10-day, they're also on this side of the green line coming down. Over here, they're on this side of the line going up, right? So when you see that alignment, 20, 10, 5, in opposite alignment, it's not an uptrend. It's a fucking downtrend. That's why they're aligned that way. And then opposite over here. So if you look at the Qs, when the NASDAQ sold off, I got short the NASDAQ. Here's the problem. This is why it kind of got a little wanky. With the money flow, I watch the SPY. Now look at this chart. This is the NASDAQ. This is all your tech stocks, your fucking Teslas, all that stuff, right? So they topped out that day right there, broke the box, very bearish, closed below the 20. What did I say? If you're looking at this pattern right there, broke the box, close under the 20, all of the alignment is pointing down. 20-day, 10-day, 5-day, right? That's the pattern. It broke. If you remember on that day, doing my lives, like, hey, it's probably going to stop right in here, which it did. If that breaks, it's probably going to come down into here, which it did. And then, look, if that breaks, probably going to come down into here, and it's just going to walk down until it stops, and then it's going to turn. And when the one it gets back above, it's going to start building a box there, like we see here. It'll start building a box, and it'll go into a stage 1 where price starts to build this box and go sideways, right? Now, we don't know. That means it's going up. Let me let you know something. Nobody knows. Nobody knows where stocks are going. So we can't play that game. So we can play blackjack with rules. Like we could have rules. If I get an 11, I double it. If the dealer has a 5, I assume they're going to bust. And I create these fucking rules for myself. And I don't know the next card, but I just got to play it according to these rules. So if I say, okay, cool. Now what's the first thing I'm looking for that this thing is bottomed? My histogram ticks up. And it did. Did it stop at support? Yeah, it blew through it and came back up, which I consider pretty bullish. It's too soon to tell, to be honest. I always say we need 4 candles to call a box. So we can be on the alert for a box. This could be a box. If we like a stock, look at Peloton. Where did Peloton stop? Right at the magic fucking line. Right? I barely mention it. I can't mention all of this in the book. It'll overload your brain, okay? Did it stop at support? Damn. Right on that mother. Look at this, dude. Pow. Pow. That's support, right? So if we're bouncing a ball, boing, boing, that would be called support. Floor. Support is your floor. So if we look over here, support and resistance zones, supply and demand are one of the 6 components of the money flow trading system. We don't think doom and gloom. We know the game is rigged. It's going up most of the time. It's going to go up most of the time. So this could be day one of a box. If you're in my trading group, I think around 11 o'clock, I sent a text out and just said, hey, fuck charts. I'm buying a little bit of everything I own. Why? It's ridiculously cheap. And it was hitting this zone. Figure this is going to hold. If it doesn't, cool. I'm cool riding it down. Yeah, I'd take a little Bitcoin at 8,000 and 6,000, shit, and 4,000 now. I mean, right? Looking back. So it stopped in my zone. I'm a little early. The MACD barely ticked. Now, I shorted the Qs with the SQQ. What is it doing? It's breaking out. Look, right there. It moved sideways and broke out, right? 5-day, 10-day, 20-day, right? MACD. So if we're looking at it, what do we see? It broke out. My target is, if there's a clear previous high, like I want to say, I took 10% off right here. We called this a previous high. There really isn't that many. If you notice, there was just level after level after level, dude. Like boom, boom. Like they're everywhere. Like This thing is really not, it's just gone straight up, you know. So that's too many to be trying to look at. So we went with this one right here. I sold 10% of my short. I added to Peloton, Stamps, betting they're in a stage 1. Next target, 70 RSI. 70 RSI. If the sell-off continues, right? And then I'd be looking to sell a little more of my short right here. What am I doing as I sell my short? I'm distributing that money in any stocks that have set up. You know, I don't know if it's done going down. I just know what it looks like when it's a stage 1. So is Stamps forming a box near support? So let's see if we got everything together here. Now, it's important, as you look at charts, look at them in the past. What do they look like? When you look back and you think, where would I have liked to have bought Stamps in the past? Man, I'd like to have bought that and then sold that. Duh, right? Duh. Look at that. Okay, we'll do it now. Yeah, do it now. So look, big down move, ugly information below the magic line. Look how it hangs on it though. See that? Crazy, right? Well, it did it again. So let's do this again. Let's do this again. So here's the box that was being formed right at support. Doesn't that look just like it? Doesn't it? Like price sold off and stopped right at the previous stage 1. Ran up, hit the RSI, got too greedy, price too high, we sold some, sold off. Now it's right back in the zone again, right back where we had the trade the last time, right? Unless we think it's going to break and go lower. And look where it ran up to last time, right to the previous high. And then look where it ran down to, right to the previous low. That's funny, right? Everything's aligned negative. So what we're looking for is this down move done. What's the first indicator that the down move is done? RSI is going to go extreme to the low side. Price is going to start to print sideways. I thought we had that going right here. It broke. If it comes back into here, you get to count all these candles. And it's right at support. I'm thinking this thing is done going down. This would be some aggressively early buying if you did it right now. But I did. I'm going to be honest. And I did it at the 1.7. I knew this was nonsense. I could tell the market nobody was going into the weekend that goddamn short. They're going to pull it up, covering shorts, getting out. Opportunity buyers are going to step in. It was just sickening. And then our chat room went quiet as everybody's like, oh my God, what did I do? I'm so stupid. And then that's when I know when everybody's sick and then it pulls. That's usually the bottom. I have a good indicator. My richest friend, whenever he calls me and I can tell he's concerned, it's usually the low. So here's what I like to do, and this confuses people on the money flow. Some stocks I will just sell and get out. Groupon. We traded it perfectly. Got in here sideways, rolled it up. When the thing goes extreme, taking it off, got out of the stock. Made my 80%, got out. 60%, whatever it was. Got out over here when it broke down. Why? I didn't think it was worth it. I thought that was what it's worth, man. Guess what? I was wrong. It went higher. How did we know it was going higher? It broke out again. I saw the signal. I didn't take it. Why? Because I really thought that was the previous high. I didn't think the company was worth more. I'm not that big into their business model. I just didn't like. I liked it down there. I didn't like it up here. I just felt like I had better opportunities with my money. And look what happens. Bam. Now, was I wrong? Yeah, I'm wrong. But I'm only wrong if I stay with the stock, right? You get what I'm saying? Meaning, I don't stay with all of them. But some I do stay with. And this one, I got it wrong. It kept going. But I made a bunch of money on it. So it's not like it's a bad thing. It just kept going. This is why I keep some stocks. So I have a different opinion on Roku. So I didn't sell a fucking share of Roku into this sell-off. Shit, take it down. Take this thing back to 200. Fuck it. Like that's what I'm wanting to do. I've been buying this since it was in the 80s. And so I keep a core position in Roku. And when it sells off, good. All I care about is when it goes back up. Why? Because I plan to own these for a long time, all the way to $3,000. Right? Why not? Why can't this be an $1,100 stock? Shop is. Shop's $1,131. Right? Apple would be if it stopped doing fucking reverse splits. Tesla would be, right? So Tesla is at 597. I mean, that looked pretty good over here. So we see the pattern playing out. It's running up, moving side. See the sideways? So look at resistance. Look how long it hung up here. It's entire month, dude. Look. Sideways for an entire month. Did it signal? Did it tell you this was overpriced? Yeah. But fuck, it said it over here too. And then look, it went sideways for almost, what, a month, a couple weeks before breaking out again. So now we're going the opposite. We're breaking down. So what are we looking for now if we're owners of Tesla? We're looking to accumulate, right? You want to get rich, right? Well, in order to be rich, you have to own shit rich people own, which is stocks, land, bonds, apartments, houses, trailer parks, businesses. Like, you need to own things, not sell things. You need to own things. So if we can figure out bottoms, I mean, God, look at the reversal in that day. Jesus. Man, if you like Tesla and weren't buying, you're fucking, I can't even comprehend that. This low here, this was absurd. Peloton did the same thing, man. I just had to buy some. The sell-off was stupid. So it hasn't technically set up yet, but I imagine we'll see if it holds here. But there's your first signal, RSI is extreme. Every time it's been extreme was a time to buy this stock, okay? Maybe not that day, but that's the time to buy that stock. Now, Snapchat is one too. I already took all my gains. I started out with 200 and something shares of Snapchat, 250 in this last little rotation, right? If you remember, back over here, we were buying it. And then we sold some, and then I sold some, and then I just been right in a core position this whole time. It's selling off. Cool. Still way, this thing's going to 100, 200. Like, that's how it works. Unless they go out of business. As long as they keep growing their business, as long as Tesla keeps growing, it's going to go higher and higher. In the middle, it's going to do the 4 stages of price movement. So every stage 4 sell-off is going to stop and set up, and the RSI is going to go extreme. Price is going to start to go sideways, and then MACD is going to turn, and then it's going to break out of the box that it forms, and then it's going to start going. And then happy times are here again until they aren't. And then it'll stop, and then the RSI will go extreme. It'll start to move sideways, and then you get to make a decision. Am I holding this into a stage 4? That will happen because they all happen. And when it happens, am I going to hold it or am I going to sell it? If you're going to sell it, then put in your fucking order. Like, if you're like, no, if it breaks the box, I'm out. The problem is it can get very finessey with some of these stocks, and you'll give up a lot of big gains if you start riding them too tight. You can, though. You can. And then just be quick to get back in. But if we look back over Snap here recently, look, every time it dipped on that 20, man, it just went back up. Look, just went back up. So, I mean, this level here, it held for a while. I mean, fuck. Let it come in here. Shit, we'll buy some more. On our way to $89. I mean, how do you think we get DraftKings? You want to buy it whenever at the highs or you want to buy it at the lows? You can buy it like all these dipshits I watch trading all the time, buying it over here when the RSI is on extreme. Just dumb. Or you can buy it when it sells off and starts to go sideways, which is smart. So, I don't know, man. You get to decide. And so, good trading, good investing, this takes courage. If you go to, look at this. So this is one of the things I teach is you should separate your trading. I talk trading a lot because investing, I mean, do you need to be taught to like buy shit and hold it? Like, that's not complicated. And so if you look at these stocks, so for 21 years, I've been accumulating shares in these stocks. Not all of them. Like, this is a brand new add to the portfolio about a month ago or so. Kellogg's. Why? Let's look. It got way below that magic line. Look, it hit an extreme. Started buying some. Bought some. And now we're breaking out. So when I first add a new stock to my thing, I might just buy like 5 shares. Or maybe I sell some Exxon, right? Just a little. Why? Because we bought a bunch over here. Maybe just a little. Why? To add to Kellogg's. Plus I add new money, right? Plus dividends. And over time, I build this up. And now if this breaks and runs, I stop. I stop adding. Done. Why? Because it's not in a good buy zone. And you say, yeah, but it may never come back. Bullshit. Price moves in 4 fucking stages. It's going to do this your whole life. Every stock you own is going to go sideways, run up, go too high, go sideways. Oh, bad news, being sued. Oh, whatever. Goes down, stops, goes sideways. Look at DLR. Remember I started buying it over here? Why? Below the yellow line, solid dividend company, below the 200. Not only can I add this to my buy and hold portfolio, but I can also do it as a trade inside my buy and hold, meaning try to buy more than I really want at first to unload it at the yellow line to gain a little boom, a little pop, make a couple $100 inside of my buy and hold. And I'm not selling. I'm only adding on stage ones. So I'm watching the pattern and I'm only adding on stage ones. So I'm adding, and you can add on the breakout too. Adding. So add. Are we adding here on a 70 RSI? No, that's where the dumb people add, okay? After it's already come up, it's already run way up, they're going to start adding when it's on the greed indicator. No, not me. So what am I looking to buy on Friday? I'm back to buying this thing again. So if you look, I'm only adding shares on lows, dude. That's how I'm using the 4 stages of price movement inside of this buy and hold. See, I've removed selling. I don't even have to worry about that. I'm not worried about that. I'm watching the stages. So I want to buy, as I scan this portfolio every day. Now, you don't have to, you're not going to have enough money to add to all of them. You're going to have to make your picks. But let me tell you something. Now that we've gone to trade, no fees, commissions, that's changed how I trade. Every sell-off, I used to pick 1 or 2 stocks. I'd bang them. If oil's on sale, banging it. Buy a little Exxon, a little Chevron, a little Conoco, a little Exxon, a little Chevron, a little Conoco. While they're in a stage 1, they break out, I stop. And then I go through and I look, are any of these run too high, too far? So I've owned Pepsi for 14 years. That position can get too big. Go take 100 shares of Pepsi 14 years ago, drip the dividends, and buy on the stage 1s, and do this consistently for a fucking decade. Guess what happens? You have a bunch of Pepsi. That's how you get rich. You buy shit on sale, and you do it all the fucking time, over and over, regardless of what's happening in the world. You accumulate shares on bottoms when the RSI is extreme. And maybe 1 share, 10 shares, but you're doing this all the time. And then when it runs up too high, you sell a little bit to add to others. And so you're managing this, right? So right now, all of my energy assets, ET, Chevron, Exxon, Conoco, right? What? They're overpriced. They've run up. Well, what's gone down? Oh, sorry. I don't know. Let's look at Walmart. What do you think I'm thinking about in Walmart? It's below the 200. So all these dipshits selling Walmart right now, I want to buy it. Why? So that I can sell it to them back up here. Now, that only works if you think the company's valuable, obviously. Every sell-off is just a product. You don't sell a buy and hold because they stumble or a product goes bad or they fuck up something. you use that to your advantage to build wealth over time. Okay? You're not trading, you're buy and hold. You're accumulating shares. Like you need to act like you own the fucking place. And you wouldn't wake up in the morning and go, sell the restaurant. Did you see what Bernanke did? Nobody lives like that. When you own a real business in the real fucking world, you don't react to Fox News and sell your business. You don't sell your car wash because some shit came out in China. Only in the stock market do people treat businesses like that, okay? In the real world, people get up and go to do the business, okay? So if they raise interest rates and you're in the business that I'm in, I own rental properties. Guess what I do tomorrow? I go look for rental properties. So I was buying rental properties when the interest rate was 9%. Now it's 2%. So you think if it goes to 5%, I'm like, fuck it, I'm done. No, I go look for rental properties. But in the stock market, a stock like O, which is a real estate investment company, will fucking plummet. It'll plummet. See, it's because you can click it with a mouse. You can click it with a mouse. So you can just change your mind. I'm out. In real business, you can't do that. Nobody does that. Nobody acts like that. They recall your car. You don't run out and fucking sell it. You go get it fixed, right? So if you take that same basic human logic to life and apply it to the stock market, all of a sudden, you're able to use all these bottoms and sell-offs and everything to accumulate the most precious of assets and build them larger and larger and larger and larger, right? So Walmart looks very tasty. What do we think Walmart's worth? Let's just do the dirty real quick. I don't know, shit. We can get into the books. I don't want to teach you how to read balance sheets. That shit's boring. It's worth $162, according to these people here that went to Wharton Business School. They all said this 16 days ago, right? But in the meantime, it's going through the 4 stages of price movement, and then it's going to turn and go sideways. And then what do? We start buying, right? And I just hold that. I just hold that. So I run 3 of these, right? And so check this out. Now, this is 21 years. 21 years of staying on this game, just doing this. Started out with one stock, AT&T, $250 in E-Trade. I put money in, buy a little more, put money in, buy a little more, put money in, buy a second stock, put a little more in, put money in, buy a third stock, blah, 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 blah. All of a sudden, one of the 5th ones runs up real high, sell a little bit, add it to one of the new ones, put money in, grows it out. Now I got like 10. Now I'm like, well, I'm going to build these up. So once you get to about 10, there's always one on sale. So as you put in new money, boom, boom. And then I begin like, well, how do I limit the 10? How do I know which 10? And I come across Dogs of the Dow and begin following that, and that worked. I began accumulating shares in these like Pepsi and McDonald's and all these big companies, and I would just buy them on sale, and I just keep accumulating. And so like this one brings in $8,589 in dividends. This one 4, this one 3. Inside of these, it's 99% dividends, right? You will notice I have a couple spec plays. Tree, Alt, it's a biochemical or a biotech. Uber and Lyft. Every year, I'll buy one. I sold half of Uber and Lyft and added Tree and decided to keep Uber and Lyft. So this year, the spec plays are Tree and Alt. So as they go on sale, if I have money inside of my, the 2 of these are IRAs, one's a SEP IRA. And I'll collect $16,000, right? And I can add up to 50 to this for my own, labor or whatever. So these money's coming in, plus I'm putting in money all the time, right? So that gives me this chunk of money of which to track all of these. So we've been buying Procter & Gamble. Why? It's on sale, man. Below the 200, started going sideways. I'm nibbling, but I was nibbling up here, right? What else am I nibbling on? Merck. Why? Big sell-off. Now it's going sideways. I want to nibble here. So when everything is good and prices are way up here and they're saying this is great, that's when we want to be selling them, right? We want to sell them then. Get it? And if it keeps going, well, it's in our buy and hold. We'll just let it run. We just stop adding to it. No point in adding to it. So what about McDonald's? McDonald's just gone giant fucking giant sideways. Giant sideways. So these are the decisions that I'm trying to make. Inside, my point is the money flow is like Bitcoin in a way. I was thinking about this last night. I've been deep diving Bitcoin. And like for 3 months now, I've been spending an hour to 2 hours every day researching the history, looking at the historical chart, looking at the different sell-offs, like first, how far did it come down? Did it go sideways? Did it break out? What was kind of going on that caused that? Watching old documentaries, reading white papers, like putting in fucking work, like studying, like trying to find it, not buying some course, just studying public information and then reading it and studying it. And how else can you use it? What does it mean to stake your Bitcoin? What is a node? What is a wallet? Like diving that, right? Reading books on it. Well, how do I take my Bitcoin off of the blockchain? How does Ethereum work? And just every day, reading, studying, listening, podcasts, YouTube, white papers, MIT videos, like just reading, studying. I only got to do this once. Once I've done it and know it, I know it. Same thing up here. How do assisted living homes work? So I go read on them. What are the big players? And then I buy 2. So I have 2. Where are they at? Well, and if you have my book, You Don't Have to Die Broke, they're in there. And VTR. What happened to those during COVID? What happened to Well? Let's pull it back. It's a $70 stock now. What happened during COVID? It went to $25. So as a general rule, if we're just trying to buy bottoms in a buy and hold stock, and let's say we don't even get it right. Say we missed the whole fucking first month and we get it on the second, and what if we just did this for a long time? And you say, Gerald, but you're not going to know that. Yeah, I am. The indicators are going to set up and then it's going to go sideways and then the MACD is going to roll over and then price is going to break out. The pattern's over and over. And you say, yeah, but maybe it goes down again. Cool, I'll buy that one too. And that's the habit. That's when I buy those, right? And then when am I looking to sell it? When it gets too high, right? Or trim it to what? Add to new stocks that are inside there. Now, you got to make it controllable. You can't have, 500 and you can't manage it. You're not a fucking mutual fund manager. So you got to figure out how many you can handle, what you can handle, and what you can't, right? So if I was buying a lot of this at $25 during COVID when everybody else was scared, and now it's $70, right? Look, there's a stage 2 breakout on the weekly. So if I go back to the daily, when's a good time to trim this or sell this? When price goes extreme, right? So maybe I could be trimming some now to add to what? I don't know. Walmart. Because Walmart's got problems right now. Right? And inside of that, what is Exxon doing? Right? So we could use that to add to what? CRM maybe? CRM's doing the opposite. See, it's on extreme. Or we could put our new money here and leave Exxon alone. Do you see how we can use the 4 stages of price movement and the giant big picture that over time stocks move up and due to inflation and more people and less assets and less things to buy, that price goes higher and higher and higher and higher. The reason Bitcoin is going higher is more people are buying Bitcoin and there's only so many Bitcoins. If everybody wanted a Bitcoin tomorrow, there's a big fucking problem. There's only 21 million of them. Right? So if everybody wants the same stock, there's only so many shares. And if everybody doesn't want it, then what? So there's only so many shares of Tesla. They like to keep printing them, but there's only so many. And that's what they cost, $597. And people got to decide, well, do I want $597 or do I want a piece of this? What do you think's better chances? Your $600 in your drawer or giving Elon Musk $600? Who do you think has a better chance of doubling your money? I don't know. We just look at history, right? We could look back and see. Damn. He's doing all right so far. The problem is these big downturns or where it goes nowhere for a while, right? Look at that support level. Jesus. So we have big moves followed by long sideways, big moves, possibly followed by long sideways. Could be a chance to accumulate. I don't know, man. I'm just telling you what I do. So now we come inside. Let's look at CRDM. This is one of our trades. I haven't sold this one. Started buying in here. I've added on the breakout. It pulled back. It broke the box. And on that day, I didn't sell. You could have. You'd have been justified. I think the stock is worth a lot more. Next day turns down. I mean, that's the day you could have sold it legitimately. It's so close though, dude. It's right there, right? Next day, this is ugly. Comes back. You know, I like the close. The close is what I'm looking for. To me, that's super bullish. Only to be ugly again, only to come back. So that's where we're at on that. Got a bunch of trades that look like this. Disappointing because it went from $14 at one point to $8 something. That's a 40% down move, man. You see the box though? I don't know. Man, it's right there. It's right there, so I haven't cut it. I mean, it's got a down slope to it, but God bless, it's right there. I'm going to give it a little room. You can see these 2 days where it keeps poking. I mean, even if it gets back here, that's a 40% move higher, you know? So, and this is a lot of these. This is one of the reasons I didn't do a lot of mass selling is it's the whole market being readjusted. It's not like my stock. It's not one stock. It's fucking all stocks that are in the NASDAQ. All the momentum, the growth stocks, right? This is why you got to be diversified. And, you know, if you're like, hey, fuck a buy and hold, I'm just going to trade. Okay. But buy and hold makes lots of money. That's what you don't understand. If you just buy and hold dividend stocks that pay dividends and you just put money in it and you just buy when prices are cheap and you just do this your whole fucking, you just end up with a bunch of money. That's how it works. It goes up over time. But those have to be quality companies, you know? And then if you're trying to trade or flip, there's no point in doing those. I mean, you can if you have big enough money. Like Pepsi's set up for a great trade right now, but you need big money, right? You need look, I mean, $13,000 was up $420 today. Shit, you can do that in a penny stock with $420. Shit, you can put $420 in a penny stock and be up $420. It would take $13,000 in Pepsi to be up $420 yesterday. So if you're trading, obviously you got to take that into account, right? But also take into account if a stock's going to move little money that big, you got to realize it can move down that big. And we don't know direction. Nobody knows where the market's going. Nobody. I don't care what articles you're reading or what they're talking about because they don't know the future. They don't know the next card. They don't know interest rates or what Bernanke's going to do or what Biden's going to do with the global whatever or new technology comes out. Nobody knows that shit. I was going to come back and look at stock, but I don't see any point, man. We're seeing a rotation, I believe. Most of my money right now is in utility stocks. My largest position is right here, AEP. This is now my largest position, is in AEP, D. Look, I'm playing for this. These are slow movers, but I got about 20,000, maybe 25,000. And then I've got a large position right now brewing in the UTSL. I have like 500 and something shares in this. So it's about $10,000 in a triple leveraged utility ETF, triple leveraged, okay? So that's the equivalent. My 5,000, or was it 10, what am I saying? I'm at 500 shares. So my 10,000 is the equivalent to 30,000 in the XLU. So 30 grand. And then I'm going to add on the breakout. I'm going to start scaling it off on the way up. Right? It's my largest position, is those energy stocks. And as they climb higher and higher, I'm going to take money off of them to add to the Pelotons, right? The Rokus, the Squares, as they set up, because these stocks are going to take weeks to months to set up, okay? This is a long ways from breaking out. Look at that green line. See it? But where's it at on EP, AEP? It's breaking out. See what I'm saying? So that it's going to take a while. These stocks are going to take a while to set up. Even something like Nokia is one I've been adding. Look, still below the green line, holding support, but it's still below the green line. So we're seeing a rotation in these stocks. Look at Procter and Gamble, big move up at the close. You know, we'll see. We'll see. Does it keep going? I don't know. But all those utilities are in my newsletter, man. Go on. There's a whole page. Look, this shit ain't secret. We were trying to play gold, and gold just kept it. I finally just had to drop down to like a fourth of my position. Give it a second. So if you look in utilities, these are the ones that I own big positions in. The last time I did this, I played Southern and Duke. I've got plenty of those. So these are the ones that I'm playing now. And for a trade, I'm using the UTSL. Okay? If you were buy and holding, you would use the XLU. Don't keep a triple leverage fund in your buy and hold. That's dumb. You don't want to be, because that could put you in a position to have to sell it. You'll never have to sell the XLU. Right? And then these are the three that I'm trading right here. There's no point looking at all these are the same, dude. CBay, they're all the same. Every stock looks exactly the same. They got smashed. A lot of them came back toward the close. If they get back up in this box, they're going to be great. Yeah, I'm still in FE. I'm in FE till it hits $40. But remember, when were we buying FE? You know, all these stage ones, man. You know, all these low prices. So FE will go back to the, now look, you see the yellow line? Look, see it? We were buying FE way below it. This is a dividend paying utility stock. This is a dividend paying utility stock. So you want to buy those when they're way below the yellow line. Don't do this yellow line thing with a non-dividend. It's got to be a dividend stock. They go back to that line. Look, they go back. You just buy it on every stage one, and then you sell most of it at the yellow line. Easy peasy, right? Easy peasy. So now I get young people, you're not trading as much money. You're like, I don't got no money in utilities. All right. Don't mean you can't fucking learn, dude. Watch. You're going to get more money in life. So if you got caught in trades, you just wait. Like, don't be a little bitch. They're coming back. They all come back as long as you're buying legitimate companies. So go get more money. Sell some shit. Like, get some more money. Put it into your account. Like, invest in yourself. Acquire more shares, assuming you're buying good things, okay? Don't buy more shares of dumb things. So if you believe in the EV trade, I'm ready to buy more solo, man. I don't know about you. So remember last time this set up, pull back. Now we pull back. So we'll see. You got Workhorse. Shit, Kathy Wood's in there buying Workhorse. You can't do the yellow line on every stock. Don't be a dipshit. This works because they're quality dividend stocks. That's why it's called the bread and butter. Okay, when a dividend stock goes below it, you wait for the stage one. The target is the 200. There is no stop. The target is the 200. So where did Pepsi go? Below the 200. Lets me know I can start buying. Even as a trade, I could buy fucking $1 million here and sell it right here. It's almost, it works. I mean, I'd like to say all the time. Obviously, I can't say that. Procter and Gamble, it will hit 130. Like, these are drawn to that line. Penny stocks are different, though. ZYNA. You know, we were trading this over here. Everybody liked it. I don't know why you wouldn't like it over here now. I mean, everybody liked it over here and then up. So I don't know why you wouldn't like it here now. It's because you don't understand the money. Like, it's doing it again. This over here, dummy, listen. This is fucking this. And that shit will play out your whole fucking life you're in the stock market. It will go to the left. So if you have a problem with this, you're in the wrong game. If this fucks you up, that it does this pattern to the right, go do something else. Like, you can't play this because it does this over and over. It's going to do this your whole fucking life until you die. It's going to go down to the left, to the right, I mean. And it's going to stop, and it's always going to go further than you like. And then it's going to go sideways. Always. Every stock ever. Over and over and over and over. And so you can either learn to control that and use that to your advantage or not. And if it's not, then go play something else. Like, you're playing the wrong game. The beautiful thing about the market is it reacts so fast and so quick that it gives you opportunities all the time. So for this stock to go to $22, it's going to run up to 9, pull back to 4, run up to 12, pull back to 10, run up to, like, that's what they do, right? Isn't that what it's done so far? Right? Isn't that what Bitcoin did? Oh, you guys had Bitcoin 4 years ago. Still broke. Could have been fucking rich. Everyone on here could have been rich buying Bitcoin. Decided not to. Too busy to go read about it. I got the same excuse. Oh, I'm too busy. I don't know. I don't know. Why not? Ordering from Amazon every day. Don't own an Amazon stock. So, look. I mean, look at this. This is Bitcoin. Every sell-off was a blessing. So what you should do every sell-off is buy more Bitcoin. Like, you should have just fucking mortgaged your house, huh? Now that we look back, right? But this is all assets, man. All quality assets go up over time. You know, especially if you're catching bottoms. Remember copper? Yeah, I'm in FCX. Why? Look, it's in my buy and hold. Where'd buy and hold go? Oh, I turned the channel. Anyway. So if we go back and look at copper. Since I've owned copper, every time it did this, you just want to buy more. This was a big, brutal one. 2015, look at this shit. From $30, $40 down to $5. And then you got a second shot over here. What do you think you get another shot? And another shot. And another shot. Why? Because copper is a commodity. It goes up and down in price based on building. And so as the economy has problems, it comes down. And then when everything goes up, then it comes down, then it goes up, then it comes down. Same with oil, right? Same with oil. Same with the S&P 500. Same with bonds, right? See, TLT, look, straight down. Now it's going sideways. Started buying bonds. They're a disaster, though. Jesus Christ. So that's that game. So you can play it as a trading game. Play it super tight. Hit your RSI. Start taking that money off. Boxes breaks, you're out. You can play it that tight. I don't like playing it that tight. I like playing it as a portfolio, 50, 60 different stocks, different sectors, looking for different things, taking money off, selling into strength, buying into weakness, and trade. Like, so I want to trade around square all the way to $1,000. You say, oh, it ain't going to $1,000. I bet it does. I bet it does. Shit, they're one of the first adopters of Bitcoin. What if everybody adopts Bitcoin? They got a big-ass jump on the banks, right? So, you know, think about Shopify. Think about Uber. You don't think Uber's going to $200. You don't think DraftKings is going to $100. But in the meantime, we're going to have these big stage 4 sell-offs. Remember this big, ugly one here? Shit, nobody wanted to own DraftKings over here. Now everybody wants to own DraftKings. So you see how these sell-off, these stage 4s, these are your money makers, man. Although, so let's say you got caught, you have no money to buy, you don't own any assets that have gone up. So when you, what would I say? I'd say, well, you trim the ones that have gone up, you trim those oil stocks, and you look to put it into these. That takes courage. And so as you learn this process of trimming the winners to add to the losers inside of your portfolio, right? And you say, well, here's another option. You invest in yourself. You go get more money. Like, what the fuck? That's what Apple does, right? They go borrow money. Apple will borrow money put in their business. I'm not saying go borrow money, But shit, Michael Seiler just borrowed $400 million to buy Bitcoin. I borrow money to buy houses all the time and then leverage myself 5-to-1. That's what they do in business. I don't know. Maybe you're not in business. Maybe you don't see it as a business. You just see it as fucking numbers going up and down on a chart. But these are actual businesses. People get up every day and go to work here. Like they have a building. They sell shit. It's real. This is a real business doing real work. And if you owned it and went to work there every day, you wouldn't sell it based on this. Like you would know the actual value. You'd wait till it got stupid cheap and then you'd probably start buying it. You know? How do you think fucking CEOs get so rich? I mean, if you like EV cars and you weren't buying NIO on Friday, dude, something's wrong with you. Look at this low. This was just stupid. Right here. I started to buy some, even though I hate Chinese stocks. At 11 o'clock, when I texted out I was buying everything I own, it literally turned around and headed back up. Like Uber was like, when I said that, like it was $51. And it went up $4 by the end of the day. Crazy. I should have bought Uber too. Let's see. So I'm looking to buy some ramp. I tried to start playing it here, but it's come back down. But you can see the pattern, right? See the money flow pattern? It's come right down. So I'm caught in this, is what I would call caught. I don't mean in a bad way, meaning I got caught in this down move. So, but I'm not at a full position yet. So what do you think I'm looking to do? Shit, I'm going to add as this box builds, right? But I need to wait till this turns. The RSI, right? This one didn't turn, so I'm not adding to this. Right? Peloton turned though. So this will probably be one that I'm adding to quicker. Because you see, right? Once it starts to turn, it starts to go sideways. So now we're looking for that sideways. Workhorse, you already got it. You got a box being built here. You got the RSI ticking right here. Kathy Woods is in there buying, one of the greatest traders of our time. She's buying this stock. It was $42. It's now $13. Why would you not be buying this stock? Should be all over this stock. She's been giving this out free. She's a fucking billionaire. She's buying this stock. Like you need someone to come rub your neck at home and whisper in your ear, hey, you should buy this stock. Come on, pretty boy, you can do it. You can do it. Like it's right there. Now you're going to look at some that are on sale. They were already on sale. This one was already cheaper. That's why I didn't sell it. Because we were already trying to buy it over here. All this nonsense charted and it took it lower. Shit, I'm a buyer, not a seller. This stock is going higher. Now you don't have to ride with me on that. You don't have to buy it, but this stock is going higher, man. MACD's telling me it's turning. It is stupidly overvalued. Go read on it. Now, if you don't believe it's a real company or you're too lazy to read, then don't buy it. But, you know, sometimes you just get opportunities. Hey, here's an idea. Stop asking. They're all the fucking same, dude. All these stocks are the same. Every fucking stock you're going to ask is the same chart. They all sold off this week, right? I mean, what are we even talking about? Yes, I would be buying IDEX. Wasn't I buying it earlier? Look at this beautiful pattern. Man, this thing almost came back into the box. God bless. What do we think it's worth? I don't think they cover this one, though. No, they don't cover it. Anyway, man, that is it. All these stocks look the same. Go read on your stocks. You can only add to so many at a time, or maybe you got bigger money. And start adding to the ones. This is not a place to sell. This is a place to start accumulating. Get ready. Now wait for them to set up. Don't add to the ones that are still dropping. Add to the ones that are going up. Okay? All right? And go look at your portfolio and start to drip in. This is how you make money. Like you buying when shit's cheap. This is how you make money, okay? This is how the game's played, man. And if you don't have my book, go hit the bio link. Go check the newsletter. You can see what I'm doing. I got videos dropped in there too, me doing lessons and shit. Go read The Science of Getting Rich. This is your opportunity, man. Some of you guys are new in the market. Damn, you're lucky. And if this is your first sell-off, shut the fuck up. Like, handle it. Jesus, you're going to go through. I've been through hundreds of these. What did you think's going to happen? Like, the market sells off. Like, you thought it just goes straight up? Are we like crazy people? So when you're looking at the chart, what the fuck you think that red means? What do you mean when it means when I say stage 4? That means that shit happens. This happens. Hello. You need to be cool with that. It's the only way you get shit cheap on stage 1s. You remember? Remember the ones you bought that went up? Like, that's why they went up, is you bought them cheap. Right? So get your head around that. You got to get on the right side of the fucking cash register. You know how you get rich? You collect money. Like, you stop paying out money. You start collecting money. You start being the person selling shit, not buying shit, right? You start creating multiple streams. Like, you have to step outside of the box and see things different than normal people. The 7% of the people of this planet run this fucking place. And they own things. And they don't sell shit willy-nilly. They are accumulating wealth all the time. The rich don't work for money. They work to buy assets, period. To accumulate more and more and more and larger, right? But you have to bring chaos to that shit. You have to find a way, right, to organize it and do it in such a way that you're comfortable with it, right? And that's what the money flow is about. That's what the Science of Getting Rich is about. That's what I try to help people with the best we can, man. You guys be good.